Hey, everybody, welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where our primary focus is on helping businesses and their owners redomesticate out of business unfriendly environments like California. Today, we are tackling a chilling real world example, a California Franchise Tax Board audit letter that has gone viral on X, shared by Hari Raghavan. This 2026 letter notice from the Franchise Tax Board demands proof from him and his wife, Mitali, that they have truly left California. And by the way, they left California 4 years ago. This is a stark warning and reminder for anyone thinking about a quick move out of the state. Rather, California's auditors hunt relentlessly. And by the way, I know for a fact they track IP addresses. Yes, you heard that right. That is why, if you are thinking of redomesticating your LLC or corporation out of California, you want to pay the premium to get it done correctly the first time, lest your redomestication gone wrong haunt you years later. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and a certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi state, multi attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications spanning accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, let me do a share screen so you can see exactly what I am talking about. All right, there you go. So, this letter dated January 6, 2026, initiates an examination of their 2022 personal income tax returns. Hey, by the way, just while I have you on this presentation, even when you white out your address and identifying information, I never recommend you post correspondence from the California Franchise Tax Board or any other state entity or the Federal Internal Revenue Service on social media, but that's another story for another day. Anyway, this letter, which appears to be dated January 6th, 2026, initiates an examination of the family's 2022 personal income tax return. It requests specific documents, including, among other things, a Schedule CA from the Form 540 NR, breaking down income sources, restricted stock units, and bonus details, Mitali's 2022 employment agreements. Get this, all 2022 pay stubs through December 31st of each year, proof of non residency starting in January 2023, household shipment records showing their stuff being moved from California to Florida between January 1st and December 31st, 2022, moving invoices, canceled checks for household goods, and any substantiating payments to moving companies. This is not a casual request, it is a deep dive with a gnat's eye to challenge your exit, potentially reclassifying you as a California resident long after you've left the Golden State, and assessing back taxes, penalties up to 25%, and interest at eye watering rates. Now, his ex post quips, to my billionaire friends, keep your receipts, but just kidding, I don't have billionaire friends. But seriously, 4 years later, California is hunting down those who left. He calls it the start of a failing state, you think, echoing circumstances of becoming non residents. And this is a familiar refrain, as we have helped a number of businesses and their owners redomesticate out of California over the last couple of years, and especially over the last 6 months, in lieu of Governor Gavin Newsom's proposed billionaires tax, as well as the new mansion tax in Los Angeles. Again, topics for another meal. But in any event, if you look at the replies, they're quite interesting. I'll scroll down so you can see. And I'm going to paraphrase here a little bit, but basically, contact a professional immediately. That is good advice. Don't call the auditor. That is also good advice, as anything said can be used against you. That is completely true. Now, at Cummings and Cummings Law, not to sound too self-promotional here, but we have handled many of these redomestications, and we have a 100% success rate moving corporations and LLCs out of California. One client, for example, faced a $1.2 million tax bill because of a forgotten California bank account, which was used by the California Franchise Tax Board as evidence of continuing tax nexus. Now, working with that client's CPA, we were able to resolve the matter, but it could have been avoided altogether if he had hired our firm to handle his redomestication of his Series A startup rather than relying on Grok and Reddit. But hindsight is, as they say, 2020. This ties directly to redomestication pitfalls. California's so-called source-based taxation doctrine tracks income from in-state activities post-move, and Franchise Tax Board auditors routinely probe for safe harbor failures under specific code sections. A partial move, in which you leave assets, family members, employees, company interests, or any other assets behind, invites residency assertions, as was the case here, leading potentially to double or even triple taxation. Last year in 2025, we redomesticated a Bay Area fintech firm to Miami, ensuring full severance by redomesticating the California entity correctly, transferring intellectual property to Florida trusts, and documenting the domicile change thoroughly, saving about $1 million a year in annual taxes. That's annual savings, while leveraging Florida's zero personal income tax regime and creditor-proof homesteads that are not limited in value, which, fun fact, that is one reason why O.J. Simpson moved here in the 90s. But again, I will try to stay focused. Now, if you are considering a move to the Lone Star State, there are similar benefits. Texas offers no income tax for individuals, robust business incentives like up to $5 million in special incentives for tech relocations, and sophisticated business court systems. A Sacramento SaaS client we moved to Dallas last year cut their compliance costs by 40%, while avoiding California's onerous AB5 law, with second and third order wins, like attracting talent unwilling to pay those egregious California tax rates. The implications are like dominoes. First, redomesticating out of California avoids those personal audits, or at the very least reduces the likelihood of them occurring, which drain your time and cost a significant amount of fees, averaging $10,000 to $15,000 in legal costs. Second order benefits include reducing those business disruptions. Redomestication, when performed correctly, keeps the existing federal employer identification number, company contracts, assets, bank accounts, you name it. That way, from the perspective of your customers, your vendors, and your limited partners, nothing is changing. Although from a compliance, tax, and financial standpoint, you stand to reap substantial benefits. By the way, if you have a subchapter S election in effect, not to worry. Redomestication, again, when performed by somebody who knows what they are doing, which is nice. Subchapter S election remains in effect. I'm trying to be a little bit comical here because this is one of those absurd situations where if you don't laugh, you cry. But anyway, getting back on track, we also have to think about the long-term consequences to California's economic ecosystem, I mean, we're already seeing a lot of folks moving out of the Golden State, and in the long run, that is going to chill investment by PE and VC firms. And all of that, or I shouldn't say all, but certainly a substantial portion is flowing to states like Florida and like Texas. Now, if your business is still anchored in California or another business unfriendly jurisdiction, you can expect one of these letters to arrive at your doorstep sooner or later. Now is the time to redomesticate. Do not be the last business owner left standing in the Golden State. If you have questions regarding redomesticating your existing LLC or corporation, please use the link in the description for more information on this nuanced process and to schedule time for us to chat about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information useful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.